The Asian markets just gave us a huge warning
for more risky financial products. The topic of today's video will be leverage ETFs, which have seen their popularity explode over the past year. This includes single stock leverage ETFs, which give investors leverage exposure to stocks that are already very volatile. These leverage products now represent a significant percentage of total trading volume, and are starting to have real impacts on the stock market itself. If you want a harbinger of things to come, we can look at South Korea, which might be the only country in the world that has a stock market even crazier than America's. The South Korean stock market has skyrocketed over the past year, but has fallen by almost 40% since its all-time high, which it reached just a few weeks ago. The chart looks more like that of a cryptocurrency than a stock market index.
So if you're not familiar with what happened inside the Asian markets, we are watching a catastrophe happen inside the Asian markets, and you need to know. The question is, which country will be the next? First Japan, now South Korea. We must admit that Asia market is exposing something that we must understand. The carry trade, it's basically free borrowing for the mega wealth and the big corporations. Yes, Japanese yen used to be the solution. Japan became the world's biggest carry trade, aka free money borrowing to the global finance. Mega wealth, of course. The years of ultra-low interest rates fueled global speculation, and when the trade started unfolding, trillions of dollars in liquidity disappeared almost overnight. Now, South Korea has delivered also another warning. The KOSPI has reportedly collapsed nearly 40% its June peak, wiping out more than $2 trillion in the market value. Retail investors loaded up on leverage. AI hype pushed Samsung Electronics and SK Hynix into overcrowded trades. Leverage ETFs magnified every single move. Sounds familiar? Japan showed us what happened when cheap money becomes the foundation of the global markets. South Korea is showing us what happened when leverage meets AI euphoria. But here's the thing, different countries, different catalysis, same addiction. We've been told that crypto, it's extraordinary risk, and I've heard my entire life. But the biggest financial shock, it's coming from traditional finance. Leverage is being hidden inside ETFs, derivatives, and central bank policies, and institutional balance sheets. That's correct. It's not coming from crypto. The question is, when and who will be the next? Which one will follow the domino? Let me know in the comments if you have any opinion about what country might follow the next. I think it's been pretty bloody for the Asian markets, but not only that, US stocks and the entire market really. It's been a tough year, and I'm about to tell you, every single subscription you own, it will triple the price by 2027. Why? Because we haven't also the Strait of Hormuz closed and will be affected by the price of oil. And inflation, it's your money being worth less and less and less over time. Not only everything going up, it's more that your money, it's going to be worth nothing. And that's very important, and that's very serious. If Japan was the liquidity warning, South Korea might be the leverage warning. And history always repeats. See you soon.